Hello, Dave Boucher here. This presentation is going to be about company accounting controls and financial closings that I've been involved with. What you see first here is revenue recognition controls. So first main question is what ensures all revenue is recorded? These yellow things are the main areas that are important that I've been involved with. All these other ones, yes, they're important. I've also been involved with, but they're the common everyday tasks that have been done. So the other ones I'm going to go through the presentation are more complicated or more companies tend to put more emphasis on. So to answer that first question, what ensures all revenue is recorded? Billings per the sales journal plus changes in the WIP is reconciled to the general ledger itself. Also, too, in this question, what ensures all revenue from unapproved change orders and claims have been properly recognized? Costs associated, to answer that, put that on that control for that, costs associated with the verbal change orders have been appropriately accumulated and identified. And the other main one is the controller or the person in charge of that area division project maintains evidence to support the legal basis for recognizing revenue on verbal orders. So these three are kind of a little bit confusing or detailed, but they are most important for those couple of questions. Like I said, these other questions are important too, but they're common everyday accounting procedures and tasks. Now, the next area I want to talk about is invoice processing. Now, there's going to be several other, I'm just doing a few of them. There's going to be several other, like I just showed you revenue controls, and then now I'm doing invoices. There's several other ones, you know, like purchase orders, depreciation, prepaid assets, and so on. But I'm just doing the first few just for demonstration purposes. So, what ensures that all amounts for goods and services received are input and processed to accounts payable? So, if we answer that, you know, the person who directly deals with the invoices and puts them in themselves, you know, can call receptionist, facility manager, whoever. They matches the purchase request receiving document to get a more of a three-way match. Once all those three-way matches are determined, then you can see that it's processed correctly with accounts payable and the goods and services. The other main good question that comes up a lot is what ensures accounts payable are the only adjusted for valid reasons. And here the accounts payable subledger or its aging, its subledger and aging is reviewed and reconciled to the general ledger. And that's important because the accounts payable aging process could get quite complicated and confusing if you don't know what you're looking at when you reconcile it to the general ledger. Another main answer to that is the vendor statements are reconciled to accounts payable in detail. And that detail is the important word there. So what ensures credit notes? Because credit notes are, you know, could happen quite a lot depending on what area you're working at. So what ensures credit notes and other adjustments are accurately calculated and recorded? To answer that, the vendor statements are reconciled to the accounts payable, also in quite detail. Next I'm going to talk about is the billings. So the first question is what billings are recorded? The controller reviews the contracts and change orders for the billing provisions themselves. Another big thing for how to answer how the billings are recorded are the billings are reviewed on the control side by the president or vice president of that division area or project manager, depending on whoever's in charge of that accounting area of the billings themselves. And third main area is that the billings are reconciled to the general ledger, and that's always an issue if it's not reconciled correctly. So what ensures that billings reflect the correct pricing, taxes, and retainage? Here the accounts are reviewed quarterly for the retainage payments, and also has to do with the billings are reviewed by that same person in charge of the project. But another main question especially for pricing, is the system is configured to the total input, and the system meaning the IT, database, software, so on, is configured to total input information correctly. And another answer to that is the accounting system software itself is also configured automatically and accumulated cost by predefined cost categories. And that has to be done, you know, quite when there's new data, new acquisition of new company, or you get new software, it has to be configured to match the accounting system data itself, or the codes and so on. Next is cash receipts. In cash receipts, a question that comes up a lot is, what ensures that cash receipts are correctly coded? Here, the support for non-standard journal entries is reviewed. And what I want to point out that is the non-standard journal entries. Quite often, cash receipts aren't standard journal entries. They can go in several different places. So what ensures duplicate postings of cash receipts are not made to the general ledger? Here, the bank reconciliations are prepared and reviewed on a timely basis, and cash receipts are also reconciled to the general ledger postings daily. That's what you hopefully want to get less confusion on reconciliation. The two answers to the same questions also important are, what ensures that cash receipts recorded agree with the amounts deposited? And like I said, those same two controls are put on for that question too, because that happens quite often in cash receipts area. Next is the the controls for the calculating accrued liabilities. The reason I want to point this out is this happens a lot, where what ensures that accrued liability calculation is correctly calculated and recorded themselves. The control for that then is the accounting follows a standard closing procedure to identify and estimate specific accruals and comparison to the amounts of the prior month. And that's what a lot of times I haven't seen followed, where it's not then compared to what was seen in the prior month itself. Like I said, there's several other types of controls, but those there's some very brief ones. Next is more of a what I would say specific accounting controls and reporting procedures. What this is going to show is more how we accept failures when you test. You can test areas, and what I'm going to go through is there's more specific. So I want to talk about, like, say here, billing. Here, the invoices write-offs are greater than $1,000 must be approved by the vice president. That's controller or whoever's in charge. And that always has come up where the billing area, you don't get flagged for that kind of area, that kind of specification. Manual checks is another thing that has come up where the accounting system examines, compares, approves CRF with manual check copy in an accounts payable record journal to make sure accuracy. And the AP journal record has to be looked at, double checked for that manual check itself, or reconciliation won't match. Revenue recognition is another area where the billing system is reconciled to the project costs subsidiary ledger and the general ledger, not just general ledger, but project cost and subsidiary ledger also has to be looked at. Another one is the invoice processing and cash disbursements, where for this to control the accounts payable subledger aging, and I mentioned this earlier, with subledger aging is reviewed and reconciled to the general ledger. The financial statement close, a good control for that is the batch posting journal reports are attached to the journal and filed after entry to the general ledger. A lot of times that's missed where it's not attached with it. Cash receipts, mentioned earlier, and do it again, but this cash receipts journal and accounts batch listing are received and reconciled by the person in charge, where the banks match up to zero it out. And cash receipts also unbilled customer accounts reviewed, and quite often that doesn't get done where the unbilled people are not looked at correctly. And then for the cash disbursements itself, what comes up a lot is accounts payable subledger, the aging area again, and the payable is reviewed and reconciled to general ledger by the controller or the person in charge of that. Financial statement close on the reporting side. How it has to come up, and this is always important for pretty much every company, where the balance sheet accounts and significant income and expense accounts are reconciled by what could be your account manager, whoever, and reviewed and approved and signed off by the CFO, whoever the finance manager is. And also for another one for the reporting, the CFO reviews and approves on basically the budget for the balance sheet and income statement. The CFO also calculates this budget to actual variances to assess reasonableness. Now, one of the reasons that's important is on the revenue recognition side, the actual cost, by contrast, are compared to the budget itself, so the budget cost and variances are then investigated and resolved. Now, just a quick sum up of reporting requirements in an area division that I was at. Pretty much every 15th of the month, the main thing, statement of final position and operations was always done. And then the quarterly, another heavy thing I was always involved in is the project budget update and the closing projection, your pro forma, how it's going to split out. And then the annual, obviously, is your tax returns and your audits and other financial statements. And then whatever miscellaneous other statements or reporting has to get done. Thank you for the attention in this presentation.